At Davos, mood is somber as many CEOs question economic outlook. Business leaders at the World Economic Forum also see signs of hope. Quote, there are all kinds of shoes that could have dropped. It's interesting because we're going to be hearing a lot of different things coming out of Davos. The first one I noticed that I want to bring up with you, this professor over at Harvard, he was saying, hey guys, the housing market may drop another 10%. And one of the things he also was saying that basically equities like stocks, those sort of things will fall first and faster, whereas the housing market is slower. But they tend to go in the same direction. The other thing he was saying as well is that, when you're talking about raising interest rates, it's a real thing, right? So the Fed is raising interest rates and it's going to stay elevated for quite some time. He doesn't think the Fed's fund rate will come down anytime soon. He does think inflation could come down, though. So just want to bring this up to you that he sees bear signs in the real estate market. Also, too, related to real estate, which I think is a really interesting one. This is a report that was, or article I should say, it was basically saying that commercial real estate is in trouble. A lot of the big money is trying to sell because they think everyone else is going to sell. And that's sort of how these things work, right? If you think everyone is going to the same direction, you want to get there first. Someone had a really funny quote here. I want to read it to you. This is John Murray. He's a private commercial real estate at Pacific Investment Management. And he said, talking about real estate, commercial real estate, it's like the nightclub where everybody lines up to get in and then lines up to leave when it closes. So it is kind of funny, and it reminds me how markets are often groupthink, right? When everyone and everything is going up, everyone's like, getting on the phone trying to call their investment manager to like, hey, get my money in the market, get my money in the market. And when things reverse, it's like, oh my God, get my money out of the market, get my money out of the market. But the commercial real estate one's an interesting one because we talked about this before several times on the channel. With the work from home thing, a lot of people, don't go to the office anymore. So why pay for said office? You also have situations of, say, firing, or in the situation of Twitter, just not paying the rent. But the end result essentially is commercial real estate is just not in the same demand as it once was, and prices may come down. The other one, which I think is interesting as well, we've seen articles to where theoretically in some cities they could convert some of these big commercial office buildings into residential housing, because we do have shortages of residential housing in some of the major cities. Also, which is obviously on the mind of everyone, I made a separate video about this, and I may make yet another separate video about it, to go into more detail. But basically, China's population is shrinking. Actually, it was reported. I think it was like 850,000. It went down in 2022. So keep an eye on that and what people are thinking. And the other part is it's interesting because it's kind of more positive is that China is reopening, but then back on the more negative, COVID is spreading. So a lot of mixed messages, but this is essentially what it is. The world's a tough place. For example, Goldman Sachs, and I believe it was Morgan Stanley, yeah, they reported their earnings not so great. I mean, basically, we all kind of expected these things, right? Investment income is going to be down, and trading income is going to be down, and the deals of mergers and acquisitions, those kind of things are going to be down. Basically, though, the banks were preparing for recession. This is sort of part of the talk is, say at Davos or otherwise, if everyone knows that there's going to be a downturn, say in 2023, if all the companies are prepared, then maybe it's not going to be so bad, right? You're essentially getting your parachute. So we'll see how that plays out. But at the end of the day, my best advice for all these kind of things is don't fight the Fed and manage risk, which I think is always a good advice. This was an interesting one as well. I guess regards to good advice, which I wouldn't have guessed this, but it kind of makes sense. You always want to buy low, sell high, right? And evidently the Russians, the rich people, are moving all their money to Turkey and buying up property there. You can see this chart here. This is Russian home purchases in Turkey, and it's like through the roof. So, or I guess I should say buy the roof, or acquiring the roof. That's a better way to say it. But a point being, though, is that money does flow and move around, and there are opportunities out there. Whether or not it's Turkey, or I'll give you an example, like theoretically maybe Brazil, right, with all this instability. But obviously, it always goes the same way, is like high risk, high reward kind of thing. There's no such thing as low risk, high reward. It's just not. If there was, please tell me, and you can let me know right away. This was an interesting one also regarding the banks, as we're talking about this sort of like, risks and stuff like that. So the government is actually signaling that maybe we might have some breakups in banks. So this was actually someone from the Treasury Department, acting comptroller, I believe his name is Mr. Hu. And it was interesting, his quote, this is coming from the Treasury, is saying, talking about the banks. Banks can be so big and complex, and this is quote, that control failures, risk management breakdowns, and negative surprises occur too frequently, right? So basically, the banks screw up too much, mismanage too often, too frequently, not because of weak management, but because of the sheer size and complexity of the organization, right? So they have risk breakdowns just because they're just too big. Essentially saying, and then the last, we want to break them up. And the last he's saying here, in short, effective management is not infinitely scalable. So I think this is pretty interesting things that's going on. Also, too, we have a fight going on in the government. And you guys know that we've talked about this before. It is a serious concern, and the USA could default. That is a possibility. Do I think the USA will default? No, I don't. I don't think so. But they do this all the time. They debate whether or not they should raise the debt ceiling. They always raise the debt ceiling, and then they yet borrow more money. That is sort of how our government works. However, there is a fringe group of the Republicans that were fighting House Speaker McCarthy. So you never know what's going to happen in this world. Especially like speaking about what's happening in this world, Disney actually is still under attack by Peltz. We talked about this one before. Nelson Peltz, he has a fund called Treon. And basically, he's disappointed with the stock performance of Disney, basically saying like, you bought too many companies, you acquired too many things like, your Star Wars, your Marvel, your Fox, this kind of stuff. And started sending letters out to shareholders and saying, hey, we need to shake things up at Disney. So now Disney firing back is also sending out like letters and notices to shareholders. And so you send, I'm laughing because it's funny, but it's not funny to them. Basically, you have two sides calling up people who, have stake in Disney and trying to convince to take a side. It's an interesting one to follow. We'll keep track of this one. Right now, it's a war of words. Peltz does have a sizable stake. At one point, he would have had over $1 billion in Disney. I think now it's probably in the $900 million range, something of that nature. So we're talking about a sizable amount of money. And obviously, these kind of things matter when a lot of people's retirements and things like this are in Disney. Speaking of big companies as well, Microsoft, the rumor is that they're going to be announcing more layoffs this week. Usually, when you get these kind of rumors, they're pretty accurate. So we'll get that announced. As you guys know, Amazon is firing. We had Salesforce announced before. I can't remember if Google made any big announcements yet. I know we do this all the time. I can't remember if there's like anyone recently, but I do know that the last time that I checked was Google was telling their managers to like look for reasons to fire people. I mean, for real, like because what they do is they say, hey, when you do your review reports, they'll like kind of change the way that they structure the scoring system. But essentially, Microsoft is looking to fire people, which is interesting in contrast to sort of like which parts of their business and which parts are growing and contracting. They're firing people, yet they're investing more in AI. And I think you kind of know where this is going, right? If a company is investing more in automation and robot technology and AI, essentially, what do you think that means for workers, right? So my opinion and my I think pretty grounded opinion, I would say, is go into anything related to AI and be the person writing the AI. Don't be the person being replaced by the AI. I think that's a pretty sound advice. And it's the same for any kind of automated job as well. Be the person that, say, fixes the drones, design the drones, because drones are here to stay. You could talk about, for example, we went to a retail store called Uniqlo, and they had this basically a cashless cash register, and it was really interesting. In fact, you put your clothes in basically like a box, and you don't even have to move them around, and the thing scans it like immediately. It worked really, really well. And it was really cool, guys. I'm serious. So this is a real thing. And this is a follow-up a story that we had covered before. This is regarding the FCC and banning non-compete clauses. So there was a couple of details I thought were interesting in this. One was they reiterated the point that is like 1 in 5 workers are affected by this thing. If you're affected by the non-compete clauses, please let me know. And if you guys don't know what this is basically like, for example, if you're a salesperson and say just for example, you get a job at Toyota and you decide to quit your job, and then in your contract says like you can't go to work for Hyundai, something like that, right? You can't go work for a competitor to share our trade secrets, that sort of thing. And so the FTC is basically saying this costs workers. And there was something else in the article that was interesting as well, is I guess Oregon did a study. Oregon's my home state, and they were saying when you get rid of non-compete clauses, it benefits workers' wages. So that's something to consider, and I think it's something worth looking at in the future, and we'll keep track of this story. We also have this one as well. We were talking about government, we're talking about the world, and talking about international stuff. So in Sweden, if we have any Swedish people in the house, please share your thoughts on this. But evidently, the Swedish government, they're moving to get rid of permits that businesses are required to have if they want people to dance in their business. So it'd be like a bar or restaurant, stuff like that. And it's kind of funny because I guess this is basically remnants of sort of older laws that they used to have on the books. And actually, USA has lots of like crazy laws on stuff like that where stuff is like still illegal, even though people kind of ignore this sort of thing. But this kind of thing, though, is a little bit different because essentially what Sweden is doing is trying to cut out the bureaucracy and make it easier for people to run their businesses. So first step is make it so you don't need dance permits to dance. So you don't need my permission to dance anymore. Just go ahead and dance. So thanks again for watching, everyone. And this has been your daily news.